I'm Charlotte McLeod with the Investing News Network, and here today with me is David Morgan, publisher of the Morgan Report. Thank you so much for being here online with me. Very excited to talk to you about what's going on in silver right now.
Charlotte, it's always fun to be with you, and thank you very much.
Of course. And before we jump into what's happening in silver right now, I wondered if you could give us a little bit of a history lesson. This past week or so, we've seen a real surge of interest in silver, largely due to what's going on in Wall Street bets and then spreading beyond that. Are there any similar moments you can think of where we've seen this type of activity?
Yeah, well, I'll try to be brief on the history. I mean, I was doing my normal daily activities. I got an email from one of my members. I guess you know what's going on with GameStop, and I really didn't. I was writing the report, and when I'm writing the report, I am like focused, and I'm not looking at the financial markets that much. And so I paused, had a break, looked, oh my goodness, that's interesting. Didn't think too much about it. And since then, we kind of know the story. I won't repeat it. And that kind of spilled over in the silver market, which is where we're at now. Have I seen it before? Yes, more or less. I was there in the, I would say the middle of it, but in it in my 20s during the Hunt Brothers. And in fact, I was finishing my finance degree at the time, believe it or not. And I remember our finance teacher talking, she said, something's going on in silver. And of course, I was a silver metals head from, an earlier age. And so I was making a lot of money in the futures market and just really happy to see silver move like that. And really until, it peaked out and they said, the exchange said you can only sell, you can't buy anymore. And it accumulated at $50 intraday on that day. I mean, everyone loves to talk about $50 silver, and it's true, but it was a one-day event in early January, mid-January, late January 1980. It's hit near that in 2011, April, and I think the first day of May. Didn't stay there very long, longer than in the Hunt Brother days. So I have seen it, not under these conditions exactly, but I've seen parabolic moves where silver was a runaway market to the upside. I've seen that, yes.
And
it's not doing, let me just add, sorry, Charlotte. I was like, wait a minute, what did I just say? And this market isn't doing that yet. And I say yet because so much has gone on in this market on the physical side, which is the only way that a commodity market will really move substantially and stay there. And most of all of the retail dealers in North America that I know, most on a first name basis, are basically sold out. There is some product availability, they will commit for it, but you've got to wait 4-6 weeks type of thing, which is fine. It happens in these tight markets. And then the one thing that really reminds me of the Hunt Brothers is the amount of commercial bars that are taken off the exchange for investment purposes. And this has been astronomical in my studied view, because we usually see maybe 100 million ounces in a good year. Last year in 2020, we saw over 300 million ounces of physical go into the ETFs. And right now, this year, in the last 3 or 4 trading days, we've seen about 100 million ounces. So if that continues, the amount of physical silver that the registered category, which means the dealers, the bullion banks have available to them, is getting in very short supply. And that means their commitments of creating silver out of nothing with the futures markets. And they have to have cash. I mean, they can't create it out of nothing. I mean, I want to be fair that the rules say that you have to have, a certain amount of cash in your account for each contract. And they do. They also have the advantage of only having to have 30%. They can have 30% less cash than someone that's long. But regardless of the rule book, they do have to have cash, but they don't have silver for every contract that's out there. And because of that, if the physical market starts to take control of the price, then you could see where there's some pain inflicted on somebody that's promised to deliver it but can't. And at that point, if there's enough pressure on them, they'll do what happened to the GameStop, and they'll buy back at a much higher price than they sold it. If they sold it at 27 and it's at 67, that might inflict enough pain to where they buy it at 67. Well, when they're buying at 67, that's a lot more buying pressure. they're buying back their own non-existent silver, and that will shoot it to 87 or whatever. But right now, the market's flat around 27. But with all this buying, I think it's an inaccurate price. The market should be at least 30, in my strong opinion, because of all the pressure in the market physically. But yet, you can see just how interesting this paper paradigm is. It's acting as if, up 0.26%, up 7 cents. It's acting as if no one ever is buying silver at all. That's what the market looks like if you don't know anything about markets. So, well, what a quiet market. I ain't gonna buy silver. It's not doing anything.
Yeah, and just to be clear, I think there's been a lot of information and also misinformation going around since silver really hit mainstream headlines. If you're somebody who wants to be part of this silver squeeze that is going on or trying to happen, what should you be buying? Should you be sticking to physical and ignoring the ETFs and other products out there? What do you think there?
Well, I agree. I think it should be physical, but I'm free market. I mean, if you want to jump in on a silver mining company or an ETF or an
Right.
option, whatever, be my guest. I don't think it's that good. And I'm just going to add on to that, Charlotte, for a moment. I really think it's best, and please don't take this as an ego, to go to Bing or some search engine and type in 10 rules of silver investing or 10 rules of silver investing by David Morgan. Those 10 rules of silver investing will save you a lot of heartache, headache, anxiety. It's very simple, very concise. I wrote it rather pithy. It's a little bit humorous, but it'll keep you from making a big mistake. And I don't want anyone to make a big mistake. But yeah, physical is the best, really easy. It's the beauty about silver is you can call up your broker on the phone and get it, or you can do it on the internet. You don't need a brokerage account, to fill out a bunch of paperwork and verify all this stuff and then set it in and then get approved. And then you can buy a mining stock or do an ETF or open a futures account's even more involved because of the risk involved. And, you usually have to prove you're a sophisticated investor and blah, blah, blah. So best, keep it simple, keep it sincere, buy the real metal, be patient, because if you buy it today, you're probably gonna have to wait a month, maybe two, to get it in hand, but you'll get it. And that is a savings plan and real money. That's how I see it, or at least a savings plan in a well-known, most required, essential commodity. And you got it, you own it. So that's the best place, I think, for most people.
Okay. And all of this attention around silver, at least initially from Wall Street Bets and the people on Reddit, started because of talk around a large short position in silver, which is similar to GameStop in a way. And I know that Wall Street Bets has now distanced themselves from silver, but that's where it started. So I wondered if you could talk a little bit about that short position, because I think that's one of the things in silver that's very tricky for people to understand.
Yeah, it's a little more complicated. I mean, in Wall Street Bets, there's 140% of the stock short because you can do options. So in silver, I don't know what it is exactly. I know it's been if you go to Jeff Christian during the CFTC hearing, he says it's pretty normal average to be about 100 to 1. So there's 100 paper contracts for every one physical ounce. It's less than that. I checked a while back and it's dropped quite a bit over the last few months. What it was when it started, I don't know, but it's multiple. So instead of being 140% of the market, it could be 300%, 500%, 1,000%, 10 times cover ratio. It could be 100 still. I don't know. The problem is, if I know what it is in the transparent market, which can be determined, I don't know what it is in the over-the-counter derivatives market, which is much larger than the transparent market. So let's just use Jeff Christian's number years back during the CFTC hearing of 100 to 1. There's good and bad about that. One, the good is that the potential is phenomenal. The bad is these guys are the pros. They are experts. They have the exchange on their side. They have the working group on financial markets on their side. They have the exchange stabilization fund on their side. The rule book is already written in a way that they can not default by paying for paying out in paper instead of silver. So you might be standing for delivery and get a note from your broker saying, due to market conditions, we are not going to be delivering any silver after let's make up a number, March 3rd, 2021, due to extreme pressure. It seems the speculators are disrupting the market currently. We plan to return to normal. And then it'd be like the temporary closure of the gold market by Nixon in August 1971. That's my take. That's an opinion. That's a hypothetical. But it's possible if and only if this pressure remains and people keep taking physical and don't sell it back in the market. A lot of people that are using options, futures, whatever, as they see their account up 200, 300, 500%, 10 times, 20 times, whatever it turns out, and sells back, that's fine. I'm not going to say don't do it. All I'm going to say is that that's probably the end of it. That'd be the end of the short squeeze.
All right. And I know you've said in the past, probably most markets are manipulated in some way, silver perhaps the most of all. What do you think is it about silver that gives it that distinction? Does it relate back to the things that you've just been talking about?
I wish I knew. I mean, what I'm going to say is it's more than a guess. It's an educated guess. But one is, there's books written about gold, like, I forget. There's one right in my bookcase behind me, and I can't remember the name. It's a yellow book, but, it's not the conspiracy against gold. But there's been a lot written about how gold has been more or less managed price-wise through ages and ages. And that spills over into the silver market as well. I think part of it has to do with the fact that the market almost got away from them, meaning the authorities during the hunt days. So there was, I think after that, I'm pretty certain the Silver Users Association was started, which, with Tiffany's and Kodak at the time, and, some of the really big users, industrial users of silver, basically got together and said, this is never going to happen again. And even though the futures markets were designed initially for something I think is fair, and that's to hedge a market. In other words, a farmer that grows corn doesn't want to take the volatility in the market. He grows it, he knows what his costs are, and he can go into the futures market and lock in a price and not sweat it. All right, I made, 12%, and I'm good, I'm happy, I'm guaranteed that price. But it's gotten out of hand. And all markets are out of hand. I mean, it's a huge, large casino as far as I'm concerned. So silver, the question, yeah, I think what happened is in order to control the price, they had to take on more and more, phony silver, more and more bets on it going level or down in price, and to manage it within a certain range, they have to keep adding to supply. And the only supply they could add instantly is paper supply. And since almost all contracts are settled in paper, then they were good. And they've been good for a long time. And to be fair, try to be fair and balanced, for most of the time, there was enough physical commercial bar silver to meet the demand. So even though they had oversold it by 10 times or 50 times or 100 times, when it came down to, put up or shut up, give me the silver, they could always deliver the silver. But that's not the case now. As far as I can tell, they are at a point where they're pretty close to running out of the real product, but they're still massively short, which is the classic short squeeze. It's like you've got all the product. They have not covered the 100 to 1 that they claim that they have. And now there's nothing they can really do except watch the price go higher and cover the higher price. But that hasn't taken place. Like I said, I'm just looking at the chart on my other screen, and it's acting like it's the most ho-hum, boring market you'd ever want to talk about. It's up 8 pennies right now. So, but that doesn't reflect what's going on. Let me be crystal clear about that.
Yeah, I mean, as I've been having these conversations with people over the last week or so about silver, it seems like we do have two camps right now. One is very excited that perhaps we're coming to the end of manipulation. The price rise could be astronomical. And the other group is people who are saying things like, this is probably not going to last. And you should still be happy about silver because of the other things that are driving it. But, you can kind of ignore what's going on now. So, as we're maybe getting close to the end here, where do you fall? What do you see coming next?
I know right where I fall. I'm in the middle. I mean, and I'm not always in the middle, but I am usually on most things. I mean, certainly I have strong views on, government and how it should be. And, I don't want to go off on a tangent too far, Charlotte. No, I think it's really a good thing that it's really the Wall Street bets people. So I'll tip my hat to them that they've exposed the fraud of how the Wall Street types take advantage of most people. Not every case, but on a broad brush general perspective, they do. It's just a fact. So that's been exposed. Silver's been a wake up call to a lot of people now, and they realize it's very easy to market this to get. It's easy to buy, and you can hold it. This is what is it today. That's like $27. But if you do a government eagle, that's the same amount of weight in silver. It's $50 on Amazon right now. So there's a big difference between 27 for an ounce and 50 for an ounce, and that shows you the market is not balanced. The way to have a free, fair market is basically all silver would cost the same, and it doesn't. So I'm in the middle. I think what you're going to see is a squeeze, but I don't think it's going to last all that long. I think a lot of people will be happy taking their fiat funny money. I don't know how many tried and true real believers there are. But then again, if we get to the point where the investors all get delivery, 4 to 8 weeks from now, Charlotte, it's a huge demand. The SLV types, take those commercial bars for investment purposes, and the industry still needs the metal. We could see a palladium. Palladium went from about 600-700 to 2,200 and stays there and stays there and stays there and stays there. And the reason it stays there is because that's balance for the automotive industry. There's enough palladium available to meet market conditions economically at 2,200. So could that happen to silver? The answer is yes, but would take conditions that we haven't seen in silver in my lifetime. Every time we've seen silver go to 50, it's been on a spike and it's come rapidly down. In 2012 or 11 actually, and into early 12, it moved around the $30 level for quite some time, for about a year, maybe a little bit more than a year. So it was kind of a high level, but then once it broke the 26 level, and I told my paid members, thank goodness, look out. Once it breaks down below 26, I don't know where the bottom is. Didn't expect it to be 14 or 12, but anyway, it is what it is. So hopefully I answered that. I'm in the middle. I think, what I'd like to see happen, and I'll just add on, is I like to just see a cash market, no futures, no options, no whatever. There would be a free market. The private market would come up with options and futures, but it'd be a lot more designed around the physical supply, because people that really needed physical, and that's the industrial users or investors, would just bid what the real supply is, and you get a much better market conditions to determine the true price of silver.
All right. Well, as we finish up, I wonder if you have any final words for investors in this very interesting scenario. I'm sure it's going to be something that you'll continue to be talking about to your followers.
Yeah, be careful. Don't get too greedy. Have reasonable expectations. David Smith and I wrote the book Second Chance. It's $20. I'm not trying to push books. I don't make any money on books, believe me, but they're fun to write. You go to our website, themorganreport.com, get on our free newsletter, look at the books tab. For $20, it's how to make and keep big money in the coming financial or the coming precious metals storm. Something like that's the subtitle. And the 10 rules of silver investing, those things will keep you kind of in the game without getting too exposed or taking too much risk, kind of knowing ahead of time what to expect. I made the statement in 2002 or 3 that I expect $100 silver. I'm not backing down from that. I think we will see triple-digit silver. Whether it'll be this year or not remains to be seen. I doubt it'll be this year. I said $40 before any of this GameStop stuff happened. Mm-hmm. So I think we'll get there at least. And with all this going on and the squeeze that is taking place, but none of the Wall Street types are blinking yet. It's 27, and a lot of them sold probably on Monday when it hit 30 in the aftermarket, we call it, in the foreign markets, foreign to the U.S. So they made money on that right now if they want to close out their position. So a lot to be seen. I think it's a lot more bullish than the price shows right now. I wouldn't be surprised, a week from now or the end of this month, we see a much different price in silver. But silver surprised even me, so we'll see.
Okay, well, that sounds like a great place to leave it. Sure, certainly we'll be calling you back if we see that move into silver. Thank you so much for coming to talk with me today. I'm sure it's been a busy time.
It's been busy. Charlotte, it's always fun to be with you. Thank you very much.
All right. And once again, I'm Charlotte McLeod with the Investing News Network, and this is David Morgan of the Morgan Report.